Hello everyone, welcome back to the channel. Today we are going to discuss something very interesting. This product can give you returns from the stock markets. It can give you reward from credit cards and also save a lot of taxes. It is a fantastic product called the National Pension Scheme. I'm sure you've already guessed that. Folks, welcome to the channel. I am Neeraj and I talk about personal finance and credit cards on this channel. So I'm going to tell you all about NPS, why it's a fantastic product, why all of you should use this and invest in this, and also how should you strategize your credit card spends for investing in NPS. Let's begin. So, before we begin, we will set some ground rules. There are two different products in NPS. There is a tier 1 NPS product and then there is a tier 2 NPS product. We are going to talk about the tier 1 NPS product only because this is where all the meat is. This is where you will save taxes. This is where you can use credit cards to invest in the NPS as well. So we will not talk about tier 2 NPS because it's just like any other mutual fund wherein you can put in money and withdraw money at any point in time. But otherwise, I'm not a fan of NPS tier 2. Where I am interested in is the NPS tier 1 only. So the tax benefits on NPS are so good that we recommend all our clients to invest in NPS, in fact, at Holistic Prime Wealth. So, there are twofold tax benefits, right? One is in the old regime and one is in the new regime. In the old regime, you can contribute through employer and yourself as well. So basically, if you section 80C, right, wherein you have a limit of 1.5 lakh rupees, if you contribute 1.5 lakh rupees in a year from your own pocket, you get that section 80C benefit. Then there is another section wherein you can do a voluntary contribution of 50,000 rupees additionally apart from the 1.5 lakhs to earn more tax benefit, right? So these are two tax benefits where you do a voluntary contribution yourself, right? And also if your employer can contribute to NPS, you will also get more tax benefits under the old regime. So basically it's like, say you already know how your employer contributes to employees provident fund, right? Same ways, if your employer can contribute 10% of your basic salary to the NPS account, right, then that contribution is not taxable at all. So let me give you an example. Say for example, your total salary is 10 lakh rupees and your basic salary is 5 lakh rupees. So on this 5 lakh rupees, 10% contribution can be done and whatever is the tax rate that you can save. Ideally, it makes sense for people who are in the higher tax brackets. If you are in the 0% tax bracket or if you are in the 10% tax bracket, it may not make so much sense immediately, but as your income grows, it will keep making more sense. But if you are in the new tax regime, the voluntary contribution benefits are not available. So the only benefit that is available is when your employer contributes, like in the old tax regime. But in the new tax regime, the benefit is that your employer can contribute up to 14% of salary. In fact, as owners of Holistic Prime Wealth, me and my partner both contribute to NPS. We have already, we've been contributing for a year and a half, and I have accumulated a decent sum and also generated double-digit returns from my NPS investments. So if you are somebody who is already contributing to NPS through employer, comment and hit a yes and tell me that yes, I am contributing to the NPS scheme. If you are not, tell me why are you not doing it. Maybe your employer is not allowing you to do it, right? A lot of times, even employers are not interested in starting this because of the additional exercise, additional work that it may take for them. But as such, for an employer, there is no real cost because we ourselves contribute to it. So we know that there is no additional cost of doing this, right? So your employer is only lazy if they are not doing it. I would suggest that, you force your employers to do it. Folks, before we move on, let me tell you about the newsletter that we have. We are circled around credit cards. I send a monthly newsletter out to all the subscribers where they get an update of all the things that have happened in the credit card and reward points and loyalty space in the last 1 month, right? That way you don't really have to spend time watching your videos. You can just read that newsletter and you will be sorted. The link is in the description box below. You can, definitely check that out. Now let us come back to the other, benefits of NPS. So we'll now talk about the investment options in NPS, right? You will see 4 different types of investment options: government bonds, corporate bonds, alternate assets and equity. The general recommendation that, for any young person, I would suggest you max out equity at 75% and then the balance 25% can be put in government bonds. This is a simple, straightforward way of doing it. Again, before doing this selection, you will also see an auto choice and active choice. Auto choice will basically give you a default ratio of investing in different types of categories of investments, and active choice is where you make your own selection, which I recommend. Select active choice and then select your preferred contribution percentage. Maximum 75% can be contributed to any and minimum is 25%. So select equity at 25% and balance government bonds, corporate bonds, can be anything at 25%. That's what personally I am doing. It's not any sort of financial advice at all. Consult your advisor as well. Because, generally why I think equity at 75% makes sense is simply because if I'm contributing it as a, 25-year-old, 30-year-old, my time horizon is next 3 decades, right? Because in tier 1, once you've made a contribution, you cannot withdraw it till retirement. So that's why it makes sense to, put the maximum money in equity because of the time horizon that we have. If you think otherwise, why don't you comment and let's discuss, right? Then the selection of pension fund manager. Pension fund manager, you will see many options, right? I'm sharing the list of pension fund manager in the screen here, but you can go ahead with, any of the big ones, from say Kotak, ICICI, HDFC, almost all of them are doing it. Compare the returns 3 years, 5 years. Again, I'm sharing the returns also on the screen. Compare these returns, but you will not find significant returns differences among these players, right? The maximum difference is around 1% only. So we don't really know, who is going to do better in the future. If you want to pick based on past returns, you can do that. Certain fund managers have started taking it more seriously in terms of investing, but otherwise you will find these portfolios mimic the index largely. That's why, because, the cost is very, very low. So as such, for a fund house, there is really no big incentive to try to beat the index. But again, we are getting good returns because we are also saving taxes on day one. So now, what about the corpus that gets accumulated, right? So you can withdraw the corpus at the age of your retirement, which is 58, 60. You can withdraw up to 60% of the corpus tax-free, and for the balance corpus, you have to buy an annuity. So now what you can do is you can strategize it in a way wherein you withdraw the 60% corpus immediately and defer the contribution of the 40% annuity till the age of 75, and then you start taking the annuities. And a lot of tax planning strategies can also be done at that time because the annuity contribution is taxable. A lot of people don't like this fact that you have to buy an annuity, but it is what it is as of now. But all of us are largely young, right? So a lot can change in the next 20-30 years. So be watchful of that, right? And I am very hopeful that this annuity contribution concept will go away and it will be replaced with the concept of SWP, which is very popular on social media right now. And if you think that you have to create multiple accounts, NPS accounts with your employers as you change employers, no. There's something called a PRAN number, which is the permanent retirement account number that you will get when you create your NPS account. The same number can be used at multiple employers. It is completely transferable. So that way also there is no issue at all. Now coming to the main part, that is credit cards, right? So you may think that I am not in the old regime. So should I be even bothering about using credit cards to invest in NPS, right? So now there are multiple ways to think about this. If you are in the old regime, definitely use credit cards. You will pay around 0.8, 0.9% in extra charges on using the credit card for making the NPS investment. So that's why you have to use the right sort of cards also to do this investment, right? And otherwise, if you're not in the old regime, if you're in the new regime, then you're definitely not going to get any tax benefit on making a voluntary contribution. So in that case, should you do it or not? So say now, here is where you strategize and, figure out whether it makes sense to do an NPS contribution or not using your credit card. Say for example, if you have the American Express Platinum Travel Card, okay, and you've already spent 3,50,000 rupees on the card, your renewal and your next cycle change is due in few days. Here what you can do is, probably spend, and you don't really have any other place to spend, right? So then that's when you can use your Platinum Travel Card and invest in NPS and hit your milestone, because you already know the milestone rewards, right? We have discussed the Platinum Travel Card in detail on our channel. So that's why, this is one way of strategizing for folks who are not contributing to NPS, right? I mean, who are not contributing voluntarily because they're in the new regime. That's when it will make more sense. If you're short of milestone, right? If you don't really know where should I spend my money, just go and contribute it, in NPS. So largely NPS makes sense for cards wherein, there are milestone based rewards. So lots of cards are there, right? One is the American Express Platinum Travel Card. Then you have the IDFC Vistara credit card also, which gives you milestone-based reward points, milestone-based tickets. You also have the ICICI Times Black card. ICICI Times Black card will in fact give you base reward points also of 2%, and also it will help you reach your milestones. A couple of more cards that can give you rewards on the contributions is the HDFC Business Black card, probably HDFC Business Power. SBI KrisFlyer card is again another card that can be considered for contributions because again, milestones can be met with this card as well. And then you have the HSBC Premier card also that gives you 3% flat reward rate. We have discussed all of these cards in detail in the channel. Let me know if you want to discuss, if you want me to create a specific video on any of these cards. Happy to create an independent video on these cards. And let me know how you are strategizing your points and all your credit card spends on NPS, so that you can also contribute towards your retirement and also earn reward points on that. So let me know in the comment section. Until then, thank you for watching, and do not forget to like, share and subscribe. Thank you.